So, hello all, this is Akshara Menon, analyst at PMS Bazaar. Welcome you all for the episode 5 of Alternate Universe. The topic overview of global alternate investment trends and opportunities. So, before moving on to the session, let me give a formal introduction to the guest of the day, Mr. Umang Papneja, the MD CEO of Julius Baer, India. He's a seasoned banker with proven track record and profound knowledge of working in business of significant scale, size, and reputation. In his current role, Mr. Umang is responsible for driving India growth strategy, focusing on building up major presence locally. He's also responsible to steer the firm's local product and infrastructure innovation and develop the broader range of sophisticated and relevant products and services catered to growing community of H&I individuals in India. During his long tenured career, Umang has had several senior management positions in finance and private banking and wealth management industry. In September 2009, he joined IIFL Wealth, where he was instrumental in providing strategic guidance for investment decisions across asset classes, including equities, real estate, fixed income, commodities, and alternatives. The focus on continuous product innovation. In September 2005, he joined Society General, the private banking in Mumbai, as director and head Investment Advisory India, and successfully created investment products and ideas for domestic and NRI clients for global Indian subcontinent. He is a postgraduate in management studies from Bajaj Institute of Management. Umang has also completed an executive program from Singularity University in US. Welcome you to the show, sir. So moving on to the next person, Mr. Vikaas M. Sachdeva, MD Sundaram Alternates. Mr. Vikaas M. Sachdeva is an industry star with over 3 decades of experience in asset management business. He is currently managing director of Sundaram Alternate Assets Limited. So moving on to the next person, Mr. Madanagopal Ramu, the head equities and fund manager. With over 15 years of experience in Indian financial markets, he currently manages assets under management of 3,400 crores across PMs and AIF platforms at Sundaram Alternates. So welcome you all, sir. So before giving the podium to Mr. Vikaas, let me ask the audience to put their questions on the Q&A box and not in the chat box. Thank you, sir. Over to you.
Thank you, Akshara. Welcome to the show, Umang. Hi, Madan. It's very rare that when you announce a show, people already start reaching out to you. I've got people reaching out to me through LinkedIn, through Twitter, trying to tell me what questions to ask you. So it's amazing. By the way, I was just hearing Akshara, you attended Singularity, that thing which I just heard, yeah? I've always been amazed about that.
Yes. Yeah, it's a university in San Francisco and tells you what's in store in the coming years for.
Yeah, I mean, it's almost like science fiction, and I've been fascinated. I've been hearing them on YouTube. I'm subscribed to their channel, Twitter. Maybe we'll just catch up on this offline. This is amazing. Another reason for me to connect with you, not that I needed one. In fact, talking about connection, I think you have an amazing connection with people. I tried to find a lot of, things about you when I talked to your colleagues, and the answer was almost universal. There were some adjectives which were coming through. They say that you possess a rare gift for brevity. And in this day and age of so much of noise, so much of tom-tomming, I think you're one of the breaths of fresh air, somebody called it. You have a rare gift for brevity. Your colleagues, your ex-colleagues all recognize you as being soft-spoken, down-to-earth, composed, effortlessly approachable, something which I think I can also vouch for. I think whenever I wanted to reach out to you, you've just been one phone call away.
Oh, thank you so much.
You love mathematics and calculations, and it's not a surprising thing because you have a very analytical mind. One of the things I learned recently was that you're a Punjabi, you proudly embrace your Punjabi roots. You're a non-vegetarian, but your guilty pleasure is basically a steaming hot bowl of rajma chawal. Okay. Your go-to beverage is savory.
Your detectives are very good because your detectives are very good.
A lot of people love talking about this, and I must tell you that this is something which came in across the board. Your go-to beverage is a neat single malt. Cricket is your religion, like most of us, and Sachin is your god. So I think we both worship the same god in a way. You're a travel enthusiast. you love wildlife, your favorite holiday destination is the magnificent Masai Mara in Kenya, right? You're an absolute family man and you draw strength from your family's love and support, be it your parents, your wife Yogita, or your two sons Pratham and Hriday. They're the pillars of your life.
I'm
You're a true
really
blue
impressed
Taurian.
because how you have found all of this. It's amazing. Thank you so much.
So something which
Yeah.
most people don't know, I know a bit, that although you're a true blue Taurian, you have a very dry sense of humor. At times, it's difficult to make out whether you're speaking in jest or seriously because you speak with such a poker face. And I love that trait about you. So that, ladies and gentlemen, is Mr. Umang Papneja for you, the person behind the
Thank you.
professional. Uh,
Thanks a lot.
Umang, my pleasure, Umang. I really enjoyed doing this. So let's just jump into some of the questions which are coming in from the show. Quite a few queries have come in from our audience who want to learn more about Julius Baer. I hope I've got the pronunciation right. Julius Baer, right?
Yes.
Yeah.
Yes.
Could you share some insights, please?
Sure. So Julius Baer is the second largest Swiss bank. So now after the UBS and CS takeover, it has now become the second largest Swiss bank, approximately 430 billion Swiss francs of assets under management. And across countries, most of the countries except the US, we don't have any presence in the US. And of which, and it's a listed company in Zurich, of which it's probably $4 billion revenue, $4 billion CHF, 4 billion CHF revenues, and 1 billion CHF approximately as the profit. And Asia as well as India are a large pie of for Julius Baer. So when I speak about India, India is local India onshore as well as the NRI piece, which is what we call the global India piece. So that's about Julius Baer. To come back to India from a history perspective, if you would remember, this company used to be called DSP Merrill Lynch and was taken over by Bank of America and then Bank of America to Julius Baer in 2012. So this company as an entity has been operating since the late 90s. So I have colleagues which have completed more than 25 years in the same firm. Many of my colleagues, this has been the first job. Of course, they have seen the name of the company changing twice or thrice, but it's a huge in terms of longevity of employees. When you see it's quite heartening. We recently did an offsite, and there was some awards function which we were doing, and we said more than 15 years of employment we should give awards, and 43 people were more than 15 years. Yeah. So that's a little bit about Julius Baer worldwide and in India.
Amazing. They say an employee is basically, employees are the raw material of any financial services firm. And if you've had people staying for so long, that speaks volumes for the culture which is there across the organization. Amazing. About Julius Baer, from a global perspective, when you look at it from your perch, what are you recommending to your clients currently? Are you recommending investments in avenues in developed countries or emerging markets? And if yes, any specific region, any specific country that you can name? Also, a lot of people want to know how important is India as part of your asset allocation when you talk to global clients?
Okay. So let me first talk about what we're talking about for two clients here. So generally, because what we've seen, and I think that is something which personally also guides me a lot in my personal investment philosophy, is which are the businesses which give very high ROE. So now you can keep going stockwise, but when you look at countries which significantly give you double-digit ROEs for a sustained period of time, there are only two countries which stand out. One is the US and the second is India. And it is of no surprise that both these countries' stock markets have done exceedingly well over the last 10 years, 20 years, 30 years, whatever time frame you take. So as long as you look at that number and you see that this ROE is sustainable for even a longer period to come, these two markets will continue to do well. There might be other markets which I might not be aware of, but these two definitely stand out in terms of size as well as the number of companies which do sustainable early teens kind of ROE or maybe even more. So now coming to your question about what do we advise? Of course, if you come to Indian clients, when we talk about them, we are blessed that we are in a country where companies are doing phenomenally well in terms of ROEs which they generate. So home bias is always there, and if at all there has to be some overseas kind of diversification, we would pitch largely the US, and of course, tactically maybe something else. But these are the two larger markets which we will always keep talking about with a home bias, obviously, to India. Coming to what are international investors doing? International investors love ideas. They're open to always thought processes. So what Julius Baer has done is, of course, US, etc., remains a very high allocation. Would our clients be very overweight or heavyweight on India? Probably not, but Julius Baer is now going to launch a dedicated India equity fund for clients abroad and clients in various jurisdictions, starting from Switzerland, Asia, etc. And that hopefully will increase the India allocation.
Very interesting. So this is going to be on the AIF platform, or what is it
No,
going to be?
so this would be a UCITS fund.
UCITS one. Okay, so you're talking. Okay, got it. I like the way you described these two countries in terms of ROE. I think that's a very, very interesting perspective. And talking about ROEs, I'm sure my colleague Madan would want to ask you a few questions. So Madan, why don't you take over?
Yeah, hi Umang. Nice to talk to you. Alternatives as a space has been mostly looked by the institutional investors, but of late we are seeing the investor base is increasing in India with a lot of these pool structures and various other structures coming through. So, how do you see from your strategy perspective how this investor base is likely to increase in your opinion?
So, and you're talking about domestically, right? Yeah. So let's look at the path what AIFs have gone through since say 2012 when the regulations actually first came out. 2012 was the regulation. I think it was a pathway breaking regulation. By early 2013, we had the first few AIFs getting launched in the market. And since then, when you look at, I think the numbers now come closer to 8 lakh crores in terms of commitment, which is there from all Cat 1, Cat 2, Cat 3 put together. Now, it's a mix of institutions and HNIs. I would probably say that HNIs would be a larger portion than institutions today. And when you compare this with mutual funds, so mutual funds would be, say, since if we look at from the 1990s when mutual funds were first privatized, not going back to 1964 since UTI was started, but I think since 90s we've had a total mobilization, total AUM of 40 lakh crores, and we're already looking at AIFs at 8 lakh crores. So which means that we've come to 20%. So mutual funds, 20% of mutual fund AUM has now become alternatives. Now, is that the right number or wrong number? I think 20%, I think, is significantly decent from a base which was zero 1 decade ago. Right? There was hardly any alternates to speak of. And today we are talking about 20% in terms of mutual fund. Is that, can that go to 25? Maybe yes, but is that a good, healthy number? I think if you look at globally, alternates normally is around 20% of the portfolio. So I think we've almost reached there. Now, how do you think would the growth be from this 8 lakh crores? I think it would be in sync with the growth rate of mutual funds rather than having an exponential growth even further on. That's my view. I could be wrong as well. But that itself is good enough because both mutual funds as well as AIFs, if they grow at the pace which they're growing, is reasonably good. What could change is the style or is the category or is the alternate asset class which people are looking at. That could change. Say, for instance, long short funds now become very, very interesting post the tax changes for debt funds. So that could become a larger industry than what it is. And so that, trends could change, but I think it should follow the mutual fund growth rate rather than having an exponential growth rate.
Okay. Actually, my second question was the last part that you mentioned. So there are various strategies that are there in the alternate space. What are the 2-3 interesting areas for you? I read on one of the recent interviews of yours where you have mentioned about private equity being a very private credit being a very interesting area, as well as you also mentioned one point on long onlys, which of late long onlys equity is not seeing a favor, but for a long period it has done well. So, what are the strategies which you bet on
No,
for
so
the growth level?
I don't consider long only as an alternate asset class. I mean, I'll tell you why. So when you look at probably developed markets, you get SMAs, which is the managed accounts, the separately managed accounts, which people look at, and say somebody wants to quit his good cushy mutual fund job and start on his own as a manager for a few mandates. He can easily do that in the Western world. But here we didn't have any license or a regulatory framework to do it. And Cat 3 long only became the natural choice to do it. So, if when you're looking at the total AUM in AIFs and trying to categorize it as an alternate asset class, I don't think we should look at long only. So, of course, there will be growth in that because for somebody who's wanting to go on his own and take a separate investment management license, it's impossible for everyone to go and take a mutual fund license. But it's easy to, or not probably faster to look at an AIF license. So that's probably why you're seeing most of the startup asset management companies taking an AIF license. So that's one. But now let's look at other categories which look interesting. Of course, private credit you did mention. Long shot, I did tell you that post the taxation changes will become interesting. On private equity, of course, it's a great asset class, but probably the listed markets today are cheaper than the private market. So not sure whether it's the right timing in terms of going into private equity. But that, of course, remains a dominant asset class, no doubt on that. Many people will also pay real estate through these, real estate or infrastructure. So these are the actual asset classes or categories which you would want to play through AIFs.
Okay. I have some additional questions on the same point that you mentioned, but I think we'll leave it to Vikaas now if he has any questions, then we'll come back again.
Yeah.
But then please feel free to ask any additional questions. I think these are very insightful discussions. But since you've already given me the baton, let me just take it forward. You mentioned about real estate, Umang, just now. In fact, a question related to real estate, but in a slightly different way. Real estate is always, let me put it this way, real estate is traditionally considered as a traditional asset class rather than an alternative asset class, right? So two parts to this question. At Julius Baer, what is the optimal split as a diversification strategy between traditional and alternative? And if you're talking about a traditional investment avenue like real estate, how attractive is India from the rest of the world? Should one buy real estate, or should one get into rental yields? Some insights about real estate, the way you see things.
So first, let's talk about. So I did mention that around 20% of mutual fund AUM has become AIFs. So generally, which means that when you look at client portfolios, average should be around 20%. But is that a standard thing? I don't think that you can say that everybody's kind of 20% and 80% is other like mutual funds, etc. But what basically you also have to see is, I would probably categorize this into two parts. One, the new age entrepreneurs who would have kind of sold their businesses recently, etc., more inclined to AIFs. Because they are generally younger entrepreneurs who have a number of years to go. Whereas probably the traditional money who are in a different phase of life, they're probably much older. They might not be so keen to look at AIFs because of being closed-ended. So when we say 20%, AIFs have become 20%, some will have more allocation, some will have less allocation. So you can't really say that every client has a similar one, but probably if you do a kind of screening in terms of either old money, new money, or age, or something like that, then probably there will be very diverse answers or diverge answers. Now, coming to real estate, which you mentioned, real estate, because I mean, just thinking aloud right now, can be played in many ways through AIFs. One, of course, is the old traditional real estate NCD, which people used to do 16-18%, etc. I'm not sure how many people are really keen on that at the moment. Then you obviously can take equity stakes in real estate in the project itself. Third, you can also play a simple thing like maybe creating an apartment fund or something. Just buy apartments and wait for the apartment prices to rise. And fourth is, of course, a rental yield. Now, when you say rental yield, you could also do commercial, could do or warehousing. It could be both. So a lot of it can be played through real estate AIFs. And it's easier. I mean, it's I think when you say that should they do this directly or should they do this through a fund, it's easier to do it through a fund or even sometimes through a listed REIT, because you don't have to then take the onus of managing the property and collecting the rent and so on and so forth. It's being done by the manager itself. So it's always better to go through somebody who can do it better than you.
Interesting.
Maintenance of the property, all that becomes quite a hassle, as you know. Yeah.
It's interesting you talked about the wallet share of HNIs into AIFs. I was just reading a recent report that currently, I mean, this is as per a preliminary survey, the wallet share of HNI money into AIFs is around 5% at this point of time. Of course, this is a generalized figure. Old money, new money, like you pointed out, can be various use. But more interestingly, over the next 5 years, it is expected to go up from 5% of wallet share to 15% of wallet share, more in line with what we're talking about globally. So, interesting point. But coming back to traditional investment avenues and the way I think you are looking at it, what is your view on gold? I mean, gold will not have too many slices and dicing in terms of an asset class, right? So how are global investors looking at gold, and what is your recommendation to them?
So generally, I mean, because generally gold is basically something which should give you ideally inflation something returns, right? It should it's just keeping the value of your savings or whatever it is as common or as constant. But of course, after the Ukraine war and the Russia sanctions, I think the outlook towards gold has changed, because suddenly if you get sanctions, you had dollar reserves, then it becomes a little tricky because all your reserves become worthless. So most of the central banks have started and said that you can't really look at one currency as a main reserve and let's look at something else. And I think the answer to that has been gold. If you look at central bank borrowing, central bank buying in this asset class over the last 12 to 18 months. So I think that's why gold has come in good stead and has probably being looked upon very differently. And if this thing continues to stay, if this kind of thought of or mindset for central banks, then gold should continue to be maybe more than inflation beta than what we've seen traditionally.
Very interesting.
Yeah.
Very interesting. There are so many questions on gold which investors have started asking right now. This just puts things in the right perspective. Thank you for that. Madan, over to you.
Yeah, thanks, Vikaas. When you talked about products, I had this question in mind that PE as a space, private equity is seen a decline now. It's started almost now. It's almost 1 to 2 years now. How long what's the global perspective from the parent side on how long this downturn will continue, or when do you think the private equity market to again pick up momentum?
So, but I think valuations are correcting. So, if you look at generally on, say, the tech side of PE, when you're talking about Series A, Series B, etc., and Series A, B going to the pre-IPO stage. So we were suddenly looking at some companies trading at 20 times, 25 times top line. We're not looking at, there's no earnings to speak of, but we're talking about 20 to 25 times top line, which was unheard of. And maybe, but there was, expectation that there will be exponential growth, and hence people were quite happy to buy such companies. Many of them, I think, because time has passed and no new round has happened and the revenues are now much larger, there could have been a down round. So those 20, 25 times has become 5 to 10 times top line. Now, if you look at if the margin is say 33% whenever they break even, and right now they're burning and someday they'll stop burning, and if the margin of that business is 33%, then 5 times top line becomes 15p, right? And a 10 times top line becomes 30p, right? Which probably you will still buy. So we're getting into that buy zone, I think. And but does it mean that when you get into the buy zone is the right time to buy? Both of us know that markets can be irrational on both sides. But I think a lot of things are becoming interesting now. That's for sure. So you'll have to, when you look at from an investing perspective, you'll have to look at the valuation much more in a deeper manner. Now coming on to you spoke about the downturn, etc. I think the downturn, Madan, I think the good thing in a PE fund is that you raise a lot of money, but you deploy it in 3-4 years, right? So it's not that everything has gone into the PE markets at very high valuations. It's not. So drawdowns are still pending. I think somebody put a number to it that overall private equity funds probably have $1 trillion of dry powder yet to be drawn down. I'm not sure about that number, whether it's right or wrong, but supposedly a very significant number. And if valuations do become cheaper and or valuations have caught up with the fundamentals, which means that the fundamentals have been better, but the valuation not gone up, I think then it's a good time to be a PE manager at the moment if you have dry powder, because you will find a lot of opportunities which you can invest into.
Actually, it's very interesting aspect that you touched upon, that valuations. I remember some of our technology companies, when they got listed at a significant premium to the secondary market or private equity market. Now the exact reverse started happening last 1 year. So I think valuation, it's an interesting period for the PE investors where they really go. They actually go to the listed space or the unlisted space if they want to play a technology company.
That's the good part of many of the funds, because they have a full flexibility to do either private or public. Most of the private equity funds have that flexibility.
Correct. And the other related question, being having a very strong parent always helps in, particularly in the alternate space, to come out with new products. So innovative new products which you can bring. So anything that you would like to talk here?
It's too early, but I can only say, and it was in the newspaper, that we filed for our AIF license. So sooner than later, you will hear about some products from Julius Baer.
Okay. You mentioned about in one of the interviews about a fund of fund structure. I could not understand it clearly. If you can elaborate, if you should like to.
Sure. So fund of funds, there's regulation within the AIF. It's sort of a category which SEBI allowed us to do, which is the fund of funds. Now, fund of funds can be done on any strategy, right? So we can either look at only long only, for instance, as you mentioned. So we can do something in Sundaram, something in XYZ, and all of that. And you can also do a fund of fund in private equity. You can do a fund of fund in secondaries. You can do a multi-asset fund. So whatever mutual funds have innovated on, you can do that on an AIF through a fund of fund platform and give the diversification which is required. So that's what I meant when I said fund of funds.
Great. Thanks for taking my questions.
So, Umang, one of the things we hear a lot in conversations today is ESG. Okay, and I think it's quite divisive as a topic. A lot
Yeah.
of people strongly believe in the importance of ESG investment trends, family offices, HNIs. On the other hand, when you talk to people at the other side of the fence, most of them feel is that ESG is probably something which a country like India should not be really subject to, because we are just growing and there is going to be an X amount of activity which will happen, which will throw about a Y amount of issues, right? So what is the way Julius Baer looks at it? What is the importance of ESG investment trends? How are investor behavior awareness evolving? Is this a trend which is going to sustain? What's your point of view here?
No, I think so. Of course, being a Swiss bank and that to one of the largest Swiss banks, ESG is definitely an important aspect for whatever we do. Now, coming to your India, I think whether India should be in the ESG or not, I think we are referring to more on the environmental part. Nobody's discussing the S&G, I think.
Yes.
But it's I think it's quite nascent. Still, I think we have around, if I'm not wrong, 12,500 or maybe a little more than that in ESG funds launched by mutual funds. I think we had I think a few AIFs also which were ESG. So when you compare from a larger pool of say being managed money, including AIF, PMS mutual funds, which would be in excess of 50 lakh crores, 12,500 crores is nothing. It's hardly makes any. So we have a long way to go, I guess. And but I also do believe that there will be regulations around this, and the regulators are working on a paper. And I think the only way we're progressing here is progressing ahead.
Interesting. So talking about real life issues like ESG, and if I can just take you to the other end of the spectrum, again picking on something which you would have probably encountered at Singularity, artificial intelligence and machine learning, right?
Yeah.
You, from your perch, you're seeing things dramatically change around the world. How much, how are investment products going to get more nuanced? Is AI and ML basically going to help you find and deliver suitable investment advice? Are you integrating AI? I'm not using the chat GPT word here because I think that's something which is quite fluid, but integrating AI into your recommendations and services?
No, so okay, so whether we use it or not, but humans have been, of course, fascinated always to have machines predict what the stock market will do. So it's not a new thing. I think it's been around since at least maybe 20, 30 years, if not more than that. There's this book also you should read, The Man Who Solved the Market. I think it's a fascinating
Man Who
book.
Saw the Market.
Solved the market.
Solved the market.
Yeah,
okay, interesting.
Yeah, you should probably read that as well. So it's always been there. Of course, now AI is a revolutionary technology. It's more predictive rather than going into some back testing or whatever. It's different, right? And I'm sure technology advancements will happen, and there will be a lot of action here. Will it be able to think qualitatively like, say, a Warren Buffett or some other guru? That how would Warren Buffett think in a situation like this? I'm not sure, but if that happens, it will be a revolution. But then if everybody has that tool, then markets behave very differently, I would say.
That
But
is true.
let's see how that progresses. But it's a fabulous advancement as far as humankind is concerned.
Absolutely. I'm half expecting the next time I do a chat show like this, a year, 2 years from now, instead
It
of
might be
Vikaas
my
Sachdeva,
bot.
there will be it might
It
be
might
my
be my
bot
bot.
asking you. Might be my bot asking you questions. Anyway, talking about questions, I think the audience is asking a lot of questions. But I'll
Sure.
start with two questions which came to me directly through LinkedIn and through Twitter. One is about
So
India's
someone has
growth
said no
story.
volume. So I hope.
No, that was the first question. I think we were on mute at that point of time.
Sure.
I hope there has been enough volume and value both to the
Yeah.
investors. So the question which has come to me is it's about India growth story. Okay, with India's growth story shaping up in a strong way, what's your opinion or outlook on India being the next asset class in demand? Okay, how would you justify India's rich valuations as compared to other emerging markets? And of course, you answered part of it. Would India be an optimal portfolio candidate for international clients looking for diversification?
Yes,
So
it
just
will
some more
be.
color on that.
Sure. I mean, India as an asset class is, I think, a very big statement to make. But will India be a favored destination? I think yes. As I said, high ROEs as a country on an average. I think Indian businesses generate significantly higher ROE than most other countries. And your thing about whether valuations are a little higher. Now, if you look at if we're doing mid-teens kind of ROE and you're at 18, 19 times forward, I wouldn't say that it's expensive valuation. Because if you are a high ROE company, your valuations are also high. So if you're a high ROE country, then the valuations also will be high. So yes, if it would have been 25, 30 times, I agree with that statement. But if you're just 1 or 2 P's higher than normal, it's not called expensive valuation. So, uh, and earnings growth is definitely going to play a pivotal role as far as Indian markets are concerned. So um, I would say that if you're going from say 3.5 trillion to 7 trillion, 10 trillion, so on and so forth, and then the market cap definitely has to continue going up. There's no other way.
Interesting. You mentioned that we recently released a study. Uh, in fact, it's on our website. If I, which talks about the fact that how countries have become economic superpowers and what are the segments which have done well. We've analyzed US, we've analyzed China, and we believe the same markers are now available for India. So this will be an interesting discussion to have. So one other question before I move on to the chat box for these questions. By the way, Umang, you have to finally select one question. There's some cool merchandise to be won by the best questions, so you have to choose one question. So please pay close attention to the questions coming in.
Sure.
If you were to give some financial advice to your younger self, what would it be?
I think very good question. See, I'll tell you what I always feel I could have done better, or all of us could have done better. Is that so? When I graduated, I finished my MBA. India was what, a $400 billion GDP or something like that, and today we are at 3.5 trillion. Everybody knew India was going faster, but if you had asked me at that time, 20 years back, that do you foresee India to be a 3.5 trillion? I don't think I had that exponential mindset. So what? And probably it was the age or whatever the case may be. I don't think people see it that far, and people see it with that vision. I think so. My younger self, I would say my younger self that there is going to be a mind-boggling change in terms of how we are looking at this, and even this 3.5 trillion for all the younger guys watching this. Uh, I mean, if someday we are going to 30 trillion or 20, 25 trillion, I think all these small gyrations, monthly gyrations need to be ignored. So that's I think I would say that message, which is also valid today.
Very true. I was talking to somebody, Umang, recently, and he says that we compare our P's to 10-year averages. But the last 10 years, India has not taken off the way it is going to take off now. So if you always keep looking it in the rear view mirror, India will always look expensive to the 10-year average. So it is better we start looking the way forward. I think you are encapsulating that beautifully. But again, moving to the US, Sudhanshu Velankar is asking a question. What is your view on the US debt crisis? How will it impact global and Indian markets? US is on the verge of failing, quote unquote. If that happens, then it will be a disaster for many countries. This is his individual opinion, not mine. Your views on this, please.
Sure. No, so we've seen generally, if you're a student of history, go back to the 1940s post World War, the debt for a lot of countries was significantly higher, and the only way to get out of a debt trap is to keep growing faster. And you should see how US responded from the 40s to the 70s or 80s when they brought the debt to GDP down. So it's not difficult to do it, and I would not say that they're failing or anything. I'm not going to make any statement like that. But that's a country which is phenomenally resilient, and I have no reason, or I have no other reason to believe otherwise. So they will definitely bounce back, is my personal view. But um, there's no way close to failing, etc.
I think you answered it at the very beginning. You said there are two countries looking at, US and India. I think that probably headlines
Yeah.
everything.
Yeah.
Very good point. Harpinder is asking a question about your take on dollar versus rupee rate change and effect of LRS 20% TCS on international AIF opportunities.
Yeah. So 20% TCS, I think it's a TCS end of the day. It's not a tax. So, I mean, of course, a lot of it has discussion has been done on this. I do understand that for somebody who's not is just going abroad, etc., and he's paying 20% TCS, and it was not really worth it, which they've changed to 7 lakhs, right? But if you are a HNI, or if you have significant tax outflow anyway in India and you're sending out money for investments, it's a TCS which you need to recover later, maybe file rest of your taxes lower. So it is, I don't think it's such a big deal. Second, sorry, what was the second question?
Dollar rupee rate.
So of course, everybody is kind of thought that India is going to be on a permanent path to 3% depreciation every year, or 3 or 4%, and take your pick. But I think something significantly is changing, right? So A is the big size of the IT industry which it has achieved. Second is the structural decline in oil prices over time, which will happen as more and more EVs, etc., will come up. Of course, there'll be some spikes here and there because of geopolitical things, but generally the trend is down. And third is, of course, exports on manufacturing. So it is quite possible that in 3-4 years, India becomes current account surplus. And if it becomes current account surplus, this 3% depreciation will not be the norm. So I would say that rupee will become quite a steady currency.
I think a lot of people will say amen to that one.
Yeah.
So a couple of other questions which are here. I think Hitesh, I think Umang has just answered your question on fund of funds to some extent. Johnson, so Johnson's question is, how do we analyze market sentiments and quantify it for forecasting? I think he's probably alluding to quant. If I can just paraphrase it, how important do you think quant as a way of looking at investment? How do you think it is in terms of the Indian subcontinent?
See, everything has a space. But have you seen any outlier quant managers? And the answer, I have not seen it. Of course, we've seen and observed a lot of them. But there is a space. That space is empty. So somebody can come in and definitely capture that space. So time will say who's going to do that.
Interesting. One of the views I can share with the audience is quant usually works very well, and this is something I've heard. I would share Umang's sentiment that the jury is out there. Quant usually works very well, quant as a strategy, in markets where information dissemination is very, very high. Okay, so that's where you use screeners, and that's where you use quant, and that's where ETFs also do very well. But again, the space is out there. We'll have to just watch it properly.
So we're getting there. We're getting there. I think
we're getting there. We're getting there.
It's fabulous, and thanks to Twitter, everything gets transmitted very fast. That's one of the reasons why I'm not there on it. Yeah.
And I would agree with you on that. Darshan Patel is asking a question in terms of how GIFT City will play a role in attracting international funds. What's your view?
Yes, it will. So the whole, I think the might of the government, the regulators, etc., is to make it a success. And if the resolve is there, it will become a success. There's no two ways about it. So, and when you meet them as well, I think they're very, very open to suggestions, etc. And that's what you need. And it's a matter of time that GIFT City will become a destination to reckon with.
So Prathamesh is asking a very pointed question. Okay, it's more towards AIFs rather than you, but he's asking for your objective perspective. That Cat 3 AIFs have delivered around 15% returns in rupee terms at an aggregate level as on 30th September 2022. He's talking about almost a year ago, according to the CRISIL AIF Index Cat 3. This is similar to what a small cap mutual fund would have delivered. Do you think this category has a place and a great future in the portfolio of an individual?
No, as I said, see, what Cat 3, when Madan was asking me, I said, long only Cat 3 is not an alternative. It's not an alternative asset class. It's a license which many managers can use to come into the market. So if the expectation is that it will be very different from mutual funds, I don't think that's the right expectation. Secondly, you did compare with small caps. Small caps, of course, come with a different risk. I'm not sure. Of course, AIFs which are running in the markets are not purely small cap funds. They are, I think, pretty much diversified. So if they generated equal returns than a small cap, I think they did a good job. And third thing is, as mutual funds become larger and larger in terms of size, it will become difficult for them to maneuver in an agile manner. And I think we're seeing a little bit of those size constraints already coming into a few fund houses. So AIFs generally will be more nimble-footed, although you're doing the same thing, you're in the same market, but they'll be more nimble-footed, and probability of creating more alpha will be higher. So this is the way you have to look at it, Prathamesh.
I'll just take two last questions in the interest of time. Mohit Madiwala is asking a question about the differential in prime lending rates for US and India being at decadal lows. How would this induce FDI investment into India? Is the ROIC potential higher in India than in other EMs and in the US? That's one question. Yeah. Please, you can answer, then I'll ask you the next question.
Yeah. So, see, more than the rates, of course, that remains a theoretical kind of way to look at it. But I think the size. So, I think the question was more on private markets. That's what I understood. So, what manager
FDI investment, basically
FDI investment, private markets, etc. So, what normally these FDI investors look at is three things. I can maybe a simpler way of putting this is first is the TAM, which is the total addressable market. How big is the size? So India ticks that box very, very easily. Then they look for a proper team. So it's like a 3T strategy, if I can, for the lack of a better word. So you look at the target addressable market, then you look at the team which is running that business, and what's the traction in that. That's third T, right? And all the 3Ts for most businesses, and if you back the right entrepreneur, you will get that in India. So that's what they are largely looking at when they come to India.
Interesting. A lot of questions again on the US debt crisis. I think Vikaas Kothari is asking a question. A lot of others are asking a question.
Vikaas, my friend.
You have a lot of friends.
Yeah.
Neil, I think this topic on private credit market AIFs has been covered in brief by Umang, and I think we can help you with more details as we go along. Kashyap, I think you're talking about regulatory clamp down on AIFs. Should it still go at the same pace? I think it's the regulatory clamp word. I may not necessarily agree, so I'm going to just get that question. I'm just going to pass that question away.
What clamp down are we saying?
Exactly.
Yeah.
I think it's just a 10-year-old industry, a long way to go. This is a product for sophisticated investors, for savvy investors, for family offices. Talking about which, Skywalker Ratish Patel is asking about your thoughts on direct code launched by SEBI very recently for AIF funds. Will this increase popularity of investment products?
No, so see, okay, let's look at the mutual fund side. So when people said that a direct aa gaya hai, nothing will happen, nobody will. So what has happened? And from say at the time when the I don't know, maybe Vikas, you can correct me my number. I think it was 10-12 lakh crores when the direct code was announced in mutual funds. Today it's 40 lakh crores. I don't think the growth really stops because of things like direct code, etc. It only makes it more accessible to people, and the growth only continues. And it's also good from a transparency perspective, I think, and for people who want to come in from an advisory relationship from a wealth manager, that also helps. So it becomes on both sides a win-win, because you can you can kind of suggest a fund on a direct plan without any kind of, you're on the same side of the table, and charge an advisory fee. So I think it's in the right direction, I would say.
I think very
It
well
will only
answered.
increase in the market. Of course, some, when you're looking at from a business point of view, you might say you might have different views, but is it good for the industry? Yes, it is.
It's a very balanced answer you're giving, because most people tend to think direct will impinge on something, and all of that. So I think there's space for everything and everybody, especially as the uh, investor is more sophisticated. He is going to take advice from a lot of people. Whether he comes in direct or not, he will be eventually paying a fee, is the sense I think you are giving, and I completely agree with you on that. Tirthesh is asking about Gift City AIFs, which has been answered. Umang, one last question here. Sorry, I've been saying last question and I've been asking you more questions, but promise this is the last question. This is more on JB, Julius Baer. Somebody is asking you, can you highlight on discretionary mandates? Mayank Shah is asking, can you highlight on discretionary mandates, especially to multi-asset class and equity in your company, and how is it differentiated from a normal PMS house?
Yeah. So of course we do also have a long only, but let's concentrate on this for a minute. So what we're trying to say here is, so when we look at a multi-asset portfolio, so which means that can we create a portfolio for a client which would have a mix of equity mutual funds, maybe debt mutual funds, bonds, and also maybe index, or everything. I mean, normally how you would kind of create a portfolio from a wealth management perspective, not only just the traditional stock portfolio or a bond portfolio. I think that's how it is different than other PMSs which you would see. So it's largely an asset allocation portfolio than just being a long only portfolio.
Interesting. Vinod, I think the question on US debt ceiling, etc., has been answered. Johnson, we've already talked about market sentiments in terms of forecasting. I think that was a question which talked about quant. I think that's pretty much what this is, Umang. And if it's okay with you, would you consider? I think this question was a little interesting for me. I hope it's something which can win a prize here. This was more in terms of where is the question gone? I'm just trying to hunt over. Yeah, Sudhanshu Velkar, he started off, Velankar, about US debt crisis, and I think that set the ball rolling in terms of a lot of questions and a lot of perspectives. Would it be okay to give Sudhanshu the best prize?
Definitely.
Wonderful. Thank you, Sudhanshu. Congratulations for winning a prize. And to the audience, amazing questions. Really good question. And I think part of it is also because of the quality of perspective which Umang has been giving. Thank you so much, Umang, for this thing. Madan, unless and until you have any final questions, I think we could just thank Umang and end the show.
No, I think it was a very insightful session, Umang. Really, thank you for the kind of points you made on some of these specific questions.
As Vikaas said, brevity. So I hope my answers were not too short.
No,
really,
absolutely spot on.
Spot on points on some of the questions that we had. Really enjoyed the session. Thank you so much.
We had 28 questions, Umang. So your answers may have been brief, but it's generated a lot of questions. Yeah.
Thank you. Thank you so much.
Akshara?
Thank you everyone for attending. Thank you.
Yes, thanks a lot, because when I started taking notes, a page wasn't enough for me. So we had a lot to take home today, actually, from starting muscle allocation, from ESG perspective, funds of funds and all. Of course, we bought an AI also into it. So that made this, very trending. I must say that it was talking. The topic was very trending enough. So thank you all for spending time to, enlighten us on this wonderful topic, sir.